Hi, everyone. My name is Dustin Miles with Momentum Multifamily. I'm excited to have Jordan here today. Jordan, welcome. And, we're early in 2026 and excited to have you. And, a lot of, we'd love to hear just, a little bit about your background and we'll take it from there.
Absolutely. Dustin, thanks for having me on today. So, a little bit about me. So, I've been in multifamily for a little over a year now. I was an engineer in commercial nuclear power for about 8 years, went over to
Mm.
operations. Around the same time, started looking at ways to get involved in real estate. Found an opportunity in Dallas, Texas, actually, to invest as a limited partner. Uh, that investment performed very well. So, and along the way, got to know the GP very well, gained a lot of interest in multifamily. So I've really found kind of a second passion to drive myself into to go into general partnership roles myself. So got some education along the way and been doing that for a little over a year now.
Awesome. That's great. Well, cool. And just curious, I mean, how, I guess, kind of, stepping back a little bit, would love to, for everyone to know, where you located in the country, and then you made your first investment in Dallas, and would love to kind of, you know how, that seems like a, bigger jump and all that. Would love to, learn about the steps that kind of led to that LP investment for you.
Sure. So I'm based out of Wilmington, North Carolina. The investment in Dallas was with a general partner that I knew and trusted. So the steps that kind of led up to that, met him online. We got to know each other over a few months. I learned how to, evaluate deals along the way,
Hmm.
and it kind of led to a point where, I felt comfortable taking that first step, and that kind of that started the ball rolling for the rest of it.
Gotcha. Okay. Did you join any mentoring groups? Did you go to any conferences? What did that process look like for you?
Yeah, so I joined a mentoring group and have gone to a couple conferences since. Mentoring group was where I learned to underwrite, where I learned to analyze deals, and then, obviously learning now more on getting into this capital raising side, investor relationships as well.
Okay, gotcha. And then I guess for you, in where I guess how did you kind of, because you're an engineer, probably like numbers and all that. How did you decide on capital raising versus, maybe underwriting or acquisitions or something like that?
Yeah, so primary role is acquisitions for me and asset management. Uh, one of my partners does primary with investor relationships, but
Okay.
I am trying to learn both of those roles so I can still really share what I found with other engineers as well is my primary goal. So I've taken kind of a personal interest in learning the capital raising side, but yeah, I still stick to acquisitions and asset management primarily.
Okay, gotcha. And what does your buy box look like? And then I'd be curious to learn more about the deal in Dallas.
Yeah, absolutely. So the deal in Dallas was 113 units. I think it was just outside of Dallas in one of the secondary markets. Typical buy box, I invest only in Charlotte.
Hmm.
Usually look for 50 to 150 units. And currently my group has about 25 million of assets under management and about 8.5 million in equity under management. So we're, obviously always looking for deals in North Carolina. I believe that, only invest locally where can be boots on the ground and be near the assets that we purchase as well.
Gotcha. Okay. Yeah, that's awesome. And I guess as you've been in multifamily for a year. What are some things that I guess I especially I think it's really cool just because you've had a lot of really good experience, but you're also on the newer end of things, and so Anything that kind of sticks out to you as far as lessons learned or just things that you're like, oh, I thought it was going to be this way and it ended up being another way?
Yeah, that's a great question. I think the so coming in, there were a lot of transferable skills from
Mm-hmm.
engineering and operations, particularly on the number side, and then the operations correlating to asset management, especially around kind of risk based decision making, communication, and teamwork. But getting back to your original question of the way I thought things would be versus how they turned out, right? This is very much operating a business as
Mm-hmm.
much as it is. I think the perception with single family, you have a single resident. You if they vacate, then you're looking for the next resident. But this is as much with multifamily as operating a business as it is kind of that single family perception.
Gotcha. Yeah. And then I guess on underwriting and all of that, is there I guess any surprises or just kind of anything that you're like, oh, anything's I guess some things that you've learned since kind of beginning of your underwriting career versus maybe more recently.
Yeah, I'd say assumptions have gotten a lot tighter, particularly around
Mm-hmm.
expenses.
Mm-hmm.
Now that we have a few properties under our belt in Charlotte, we have the real time expenses and other income targets that we can hit. So I think that's probably been one of the biggest surprises, and that generally correlates pretty closely with the price per door cost for what makes sense for our target buy box or return profile, if you will.
Gotcha. Okay. And what is as far as vintage of going back to your buy box, what sort of vintage are you guys looking at?
So usually, Class B, Class C will do value add multifamily. Uh, Usually, it's 1980s and newer, with some exceptions if the property's in great condition. That's
Hmm.
generally the vintage we're looking for.
Okay, gotcha. And then kind of how why'd you land on that versus newer or maybe older?
So I'd say, in general, we've seen the best returns in that buy box with some of the, we'll say, lower maintenance risk.
Mm-hmm.
You get closer to Class A, you can get them at a discount, then you can still have that value adds level of return, which is usually, we quantify that as 15% annually or greater. But if it gets, much older than Class C, you're going to have, or like a C minus 1970s and older, then you're going to have a lot of maintenance issues. If you get into kind of that 1980s to 2010 range, then you still have a good property, good structure, and have some lower maintenance cost. Yet you can still renovate units and get a value add level return.
Awesome. And then as far as I guess jumping over to the capital raising and all that, how has that gone for you? And I guess any things you've kind of learned on that end, and just and I guess is I would assume a lot of the people you guys are talking to are probably engineers. I don't know who your business partners are, but are a lot of those folks engineers or and just would love to kind of just hear how capital raising has gone for you.
Yeah, so I generally speak with engineers predominantly, right? That's my background, and I can
Mm-hmm.
speak the language and uh, connect with them easier. I'll say overall, I think the capital raising has gone fine. I found that just try to add value along the way,
Mm-hmm.
and provide something meaningful for them while also sharing my story and how I've benefited and how those same things can benefit them.
Mm-hmm.
Uh, my business partners are in different functional areas, so they have different clientele that they speak with, but that's generally where I land.
Gotcha. Okay. Cool. And then I guess from just would love to hear some things that for this, for 2026, would love to hear about your goals or just maybe some things that you guys are changing up for this year.
Yeah, so late 2025, the focus shifted to starting to build out more institutional grade reporting systems, uh, particularly with internal operations, with asset management. So we're moving towards uh, building a lot of that out now. So really, just there's tons of data out there, but what I've found is there's a lot of we'll say separation between sources. So
Mm-hmm.
trying to connect those and draw insights, right, using some of the engineering background to pull some of those insights to improve property operations, kind of efficiency within the team, and free up time as well. So that's the big focus for 2026.
Okay, gotcha. And have you guys along those lines, you guys started to implement some AI or looking at that, or what does that look like for you guys?
So AI, I've used it a little bit. I think the kids call it vibe coding.
Hmm.
I've noticed that's built into a lot of the programs today. That's been useful to at least get a shell of what we're building.
Mm-hmm.
Going in and tweaking the connections, the inputs and outputs to accomplish the goal that we set out to.
Okay, gotcha. And is multifamily for you kind of is this full time or part time or what was how do you kind of divide and conquer your day?
Yeah, so multifamily is part-time for me at the moment. I'm working as an engineer still during the day, but usually I'll put a couple hours in the morning, and then if there's outstanding tasks in the evening, just to we get it done.
Yeah, yeah, awesome. Yeah, I remember when I first kind of started out because I was also an engineer and kind of back when I started, a lot of people, I don't know, people didn't really partner up or not near as much as they do now. And so I just had to, it sounds like you have maybe one partner, or maybe a few, I'm not sure. But, um, anyways, you kind of had to do it all. You had to underwrite, then you had to go capital raise, and then you had to go asset manage. And so it was, especially having a full-time job and then having a family and all that, like it was a lot. And I think, very smart for you guys to for the deals that you guys are doing, to keep those close to you. I know the first deal I put together, the deal was probably 15 minutes for me. I wanted it to be close. I wasn't looking for a grand slam. I was looking for, a single or double. And, thankfully because of the environment I was in, that single or double turned into grand slam. But yeah, it was definitely it was challenge. And then once I added other deals, then then you were started to really juggle things a little bit. So um, yeah, it's challenge for sure. So but yeah, good for you for keeping stuff pretty close to you guys.
Yeah, and I think it's important, right? Regardless of having systems in place certainly helps, but there
Mm-hmm.
are a lot of work. It does require attention. I try to walk to visit properties at least monthly, and my partners will visit it weekly for those that are local to them. So,
Nice. Yeah. Yeah. We've the first out of the first half dozen deals I did, some of those were not local, and gosh, first two were, and then I kind of went out of area for me, and that one, the ones that were out of area got really challenging pretty quickly. So.
sure,
Um,
probably put a few miles in the car.
yeah, yeah, yeah. And I was still working full time, so I was fortunate I got every other Friday off. So every other Friday I was on the road. So yeah, made it challenging for sure. We've shifted yeah, to where we want everything very close and learn to you learn lessons and you grow and all that. So but yeah, good for you guys. And then, are you guys looking to buy? I think you said maybe I don't know when you closed the one in Dallas, if that was more recently or not. But are you guys looking to buy for this year?
Absolutely. Yeah, we're always in acquisition mode. I don't have a crystal ball, but I think it's going to be a good year for buyers in multifamily. And just to clarify one point, the Dallas deal was my first LP deal,
Mm-hmm.
and I do have a 96 unit property in Charlotte. I'm GP sponsor on for that. So,
Okay, gotcha.
but yeah, looking to buy them up in Charlotte this year. So
Awesome. Yeah, sounds good. Do you guys use third party management for that deal in Charlotte or self manage or?
yes, we use third party management for that one.
Okay, cool. Did you guys? I don't know all the because it's been a long time since I've looked in Charlotte. You guys, how was the process for kind of vetting and figuring out who to go with?
Yeah, so we have a PM that we consistently use in the area. They've done well for the broader portfolio. So we've worked with them pretty consistently over the last few years.
Okay, gotcha. Okay, cool. Awesome. Well, cool. Anything you want to share with the audience, or if you want to give your website or anything, feel free to share with the audience.
Absolutely, I appreciate it. I'd love to connect on LinkedIn. Also, website is www.partnerwithgrace.com. So you can check me out on there, and like I said, I'd love to connect and learn more about you.
Awesome. Well, appreciate your time, Jordan, and I'm excited for you guys, and hope you're able to. I agree. I think this year, and I don't know Charlotte as well, but I'm sure very very similar to Texas in general, but North Carolina and Dallas and some other or Texas and some other states have really experienced a lot of growth. And so, at least here, we're kind of thinking the window depends on some of the traveling HFC stuff and what that looks like. But we, kind of think the window is 12 to 18 months, kind of in that range or so. So it's pretty interesting time right now. Unfortunately, there's a number of foreclosures and things like that. But there's that's creating some opportunity for sure. So appreciate your time, Jordan, and look forward to connecting soon, man. And we'll talk soon. Thank you.
Thanks, Dustin.
See you, man. Bye.
See ya.